I wanted to make a video on tips for first-time buyers, as it's quite daunting when you apply for your first mortgage. There's a lot to take into consideration. So the idea behind this video is to make a quick checklist for you. I'm Dan, I'm a CeMAP qualified mortgage and protection advisor. This video is purely for educational purposes and is not advice, and I must stress your home may be repossessed if you don't keep up with the repayments on your mortgage. With that out of the way, on with the video. So when you apply for a mortgage, speak with a lender first or a mortgage advisor to find out exactly how much you can borrow. What you don't want to do is start looking at properties and sort of finding your dream home and getting your hopes built up, only to then put in a mortgage application with the lender that you've got in mind or the lender that your mortgage advisor has recommended, to find out that you can't afford it. It's not a good start having your dreams crushed straight away. So, like I say, speak to a lender, speak to a mortgage advisor, find out the maximum you can actually borrow. They will then give you an idea of what sort of properties and property values you can start looking at. You also don't want to waste your time speaking to estate agents, putting offers in, also viewing the properties, once, maybe twice. It's just, it's not the best use of your time. Also, when it comes to the paperwork, don't state that you're a first-time buyer if you own a property abroad. Now, this is different. If you're putting in a mortgage application, you may qualify for a first-time buyer mortgage with their lender. But when it comes to stamp duty, it's completely different. The government stressed that in order to qualify for the stamp duty relief as a first-time buyer, you cannot own a property anywhere in the world. So it can put your budget out of line. If you've ring-fenced that money for home improvements or to put towards a bigger deposit so you borrow less, only to find out later on in the mortgage process that you need to spend out that £1,000, £2,000, £5,000 on stamp duty, it can affect your mortgage application. So make sure you get that right up front. Please put in the comments below. I'd really like to hear from you. Have you ever applied for a first-time buyer mortgage, and what was your experience? Make sure you check your credit report before applying to a mortgage lender or putting your application into a mortgage advisor. The reason why I say this is there's four main types of credit reports. You've got Crediva, or Crediva, I'm not entirely sure how it's pronounced. You've got TransUnion, Equifax and Experian. So they're the four main ones. And a mortgage lender may use Equifax, but you might be looking at Experian or TransUnion. So you think that your report is absolutely clean, but when you apply for the mortgage and they're using Equifax, they're seeing something that you haven't. So again, that can really affect your mortgage application. So make sure that you actually do a credit report on all four of those. Now, it's going to be a bit of a long-winded process if you were signing up for four of those applications. So I've actually put a link in the description below. It will effectively, it's one sign up and it will do a search on all four reports. It's a 30-day free trial. After that, I think it costs around about £12 a month. Okay, so you'd have to cancel within those 30 days. If you haven't cancelled it and you pay the £12, then I actually receive a little bit of commission for that. So great if you carry on, thank you for that. But I do actually recommend you only need the report once, so just cancel within the first 30 days. If you're viewing a property, make multiple appointments to go and view that property. When you view it the first and second time, you may not see things that are, the negatives to the property. You want to sort of, effectively, you're going to be buying this house and it's a huge investment. You're going to be throwing thousands of pounds down as a deposit. So you want to make sure that property buying is right for you. Be nosy, okay? I can't stress that enough. This is going to be potentially your future home. So look behind doors, look in cupboards, look to see if the boiler's working. You're going to get uncomfortable in these situations, and I appreciate that. You're only human and not many people go all out to be nosy. But you have that right to. If that person wants to sell that property, they need to be comfortable with you looking behind the sofas, look for damp, and look on the ceilings, are there cracks and things like that. You're going to get cracks on a lot of properties, because a lot of properties, they've settled and people haven't actually just filled the cracks in. But feel free to ask as many questions as you want. This is your investment, so it's your entitlement to know what you're investing in. Something I must stress is also be open to insurances. One insurance you must have is builders insurance. It's going to be a legal requirement if you have a mortgage on the property. The lender is going to want to know that actually you are covered should anything happen to the property, that their money is protected. There's other reasons for buildings insurance as well. Typically most people also get contents insurance to protect the innards of the house, but the buildings insurance, it's to effectively protect all the sort of the brickwork and the land surrounding it. Okay. When I say be open-minded to other insurances, it's things like life insurance and income protection insurance. What would you do if all of a sudden you're out of work? You work, your employer may give you 3 months, 6 months sick pay. If you're off for longer than that, then what? What will happen? Because the government's schemes, they won't be able to cover your mortgage payment. So you want to be considering what happens should you pass away. If you've got a partner, you've got a family, are they going to be able to afford the mortgage without you, without your income? So be open-minded, build a budget of how much you can afford every month towards your mortgage payment and your insurances, and just think of it as one lump sum payment. Something else to also consider is have all of the correct documentation. Make sure your passport's in date, because if it's not, you're going to need to get that in date before you can put through a mortgage application or a driving licence. It's the same there. If neither of those are in date, you're not going to be able to use them as proof of identification. Make sure you've got 3 to 6 months worth of bank statements. Make sure you've got all of the income that's going to be required when applying for that lender. So, if you're self-employed, you might need 1, 2, 3 years accounts. If you're employed, you're going to need maybe 3 months pay slips. If you're a CIS worker, you can need up to as much as 12 months pay slips. So make sure you've got all of your documentation ready when sitting down with a mortgage lender or a mortgage advisor. Something else, also, if you're purchasing a flat, make sure you ask how many years are left on the lease. Okay, just a quick breakdown of what I mean there. When you're buying a flat, there's a leaseholder and a freeholder. The freeholder is the person that owns the land that the property is on. Okay, and they're responsible for the general maintenance of the property, like the roof and the brickwork on the outside of the property. A leaseholder owns the unit. You can also be liable for the costs of the roof and the brickwork, but the freeholder is the one that will arrange all of that and then split the costs between the 2 of you if there's 2 flats in the block, or 8 of you if there's 8 flats in the block. So something you need to check is how long has that unit got left to lease. So typically anything 70 years or more then is going to be absolutely fine with most mortgage lenders, but anything below 70 you're going to struggle, and it also affects the property value. So you don't want to have a property for 25, 35 years, because if you came to sell it and it's only got 20 years left on the lease, it's going to cost you quite a considerable amount of money to actually extend that lease, because freeholders, they can charge tens of thousands of pounds to get that lease extended back to 125 years or 999 years. They're the 2 main ones. Hopefully all of this information has been useful. Please put in the comments below if you've also got any other questions. I have not covered off everything that's possible. You need to go through that with a mortgage advisor or the mortgage lender, but I will do my utmost to help answer any questions before you put in the application to your mortgage advisor or your lender. If you want to watch a video on the Help to Buy scheme and why I don't like it, please watch this video. If you want to watch a video on self-employed mortgages, please watch this video.